Hi, I'm Brady Ng, one of the Ken's deputy editors. Today's edition of Make India Competitive Again was published on the 24th of November, 2025. It's titled, Can a PE Firm Not Be Greedy? A U.S. Firm's India IPO Offers a Clue. Long admired as financial wizards, private equity firms today face an existential question. Is their model broken as exits dry up? Globally, private equity has underperformed the S&P 500 index over 1, 3, and 5 years, according to the consultancy McKinsey Company. If they are viewed as a money trap in developed markets, in India, this investor class is emerging as squeezers, extracting the utmost value from their portfolio companies before they go public, leaving very little on the table for public investors. But Tenneco Clean Air's IPO last week bucked the trend. The auto components company listed at a nearly 27% premium when many PE-backed Indian firms have had weak stock market debuts. The conservatively priced issue of 3,600 crore rupees was entirely an offer for sale by promoters and was lapped up by anchor investors. As Axis Capital Managing Director Ashish Nigam said during the opening ceremony, quote, "It's the hottest auto IPO in a long time. The anchor book was oversubscribed 170x, end quote. For reference, earlier in November, Lenskart anchor book was oversubscribed 20x. The U.S. parent Tenneco Group is owned by the New York-based asset management behemoth Apollo Global Management. That a fund-backed American automotive components company chose to unlock value on Indian bourses in this manner makes for an inadvertent contrast with Korean automaker Hyundai's IPO in 2024. The latter dropped 7% on debut, despite high ratings from many brokerages. Now, compare this to another auto ancillary company, Sona Comstar, which went public in mid-2021. It didn't have a stellar listing because it was aggressively priced at a PE multiple of 79 compared to Tenneco's 29. This was courtesy of, you guessed it, its private equity backer Blackstone. More than 4 years later, the share price has appreciated by 75% since its listing, but is still well below the peak that the stock reached just 6 months after going public. The promoter group, led by Blackstone, has significantly pared its shareholding in Sona Comstar, but it's still the largest shareholder. Whether it stays invested for long or not, the auto component story is looking snazzy, and Tenneco's playbook is one that Sona and others may want to study as auto markets turn volatile worldwide. Here's a question to ponder. If OEMs want to export, can its suppliers be far behind? The answer is both yes and no. Most automakers are looking to make India an export hub, from Maruti Suzuki and Mahindra to Volkswagen and Hyundai Motors. In an interview with Mint, Ashish Gupta, brand director of Skoda India, the marquee brand of the Volkswagen Group in the country, noted that exports from India are playing a key role in Indian and global automakers' growth stories, with some of the biggest opportunities for export being in the global south. Here's what Mint reported in an article titled, "Carmakers Shield India's Exports with Focus on Emerging Markets Amid Chinese Threat." Quote, "Globally, we have gone out and said, India is our most important market outside Europe," Gupta said. Volkswagen Group recorded a 20% growth in exports from India in 2024 to around 53,000 units. Its biggest markets for exports include Africa, ASEAN, Middle East markets, and North America. Regarding the production of electric vehicles in India, which can also be exported to other markets, Gupta said that all plans are being studied, given that India is set to implement new emission norms from 2027. With growth in the Indian car market being volatile, exports are playing a key role for all companies. In FY25, India's car market grew by 2% to 4.3 million, while it is expected to end FY26 at 5%. End quote. Component suppliers, meanwhile, have been doubling down on the domestic market. Tenneco India, for instance, claims to be, quote, actively establishing its operations in India as an export hub, end quote, for the Tenneco Group and third-party OEMs worldwide. Exports contributed less than 7% to its 4,890 crore rupee revenue in FY25, but its 12 manufacturing plants in India have been increasingly sourcing locally. In fact, Tenneco, which makes clean air, powertrain, and suspension products for all vehicle types, extends its localization strategy as far as it can go. It sets up facilities close to the customer. For instance, when in 2018 it was awarded a Volvo Eicher commercial vehicle contract in Pithampur, Madhya Pradesh, it set up a new facility right there. The international market-focused Sona Comstar has 12 manufacturing plants across 4 countries, including India, and as much as 71% of its 3,500 crore rupee revenue in FY25 came from international markets. But the company is tweaking its strategy, not just to de-risk itself from over-reliance on electric four-wheelers, but also to expand its domestic market. Earlier this year, it said it has been exploring broader mobility opportunities and acquired the railway equipment division of Gurgaon-based engineering multinational Escorts Kubota Limited. Private investors in this sector have come to appreciate that there's money to be made in the medium to long term, unlike many tech startup investors. Another auto parts company, Bellrise Industries, with nearly 8,300 crore rupees in revenue in FY25, listed in May. It's one of those rare stories these days where the founder holds a 60% stake and the IPO is not a squeeze-it-all affair. Side note, the promoter group holds more than 70%. Like Tenneco, Bellrise is trading at a reasonable valuation compared to its peers, at a PE of 34x. The stock has appreciated nearly 65% since its listing 5 months ago. We'll see if private investors will book profits after the lock-in ends, like they did in Tata Technologies, driveline systems manufacturer Carraro India, fintech provider One MobiQuick Systems, and others this year. But in the world's ultra-competitive and third-largest automotive market, it'll be a pity if private equity gets into a selling binge instead of supporting companies ride out the rough trade winds. This edition of Make India Competitive Again was authored by the Ken editor Seema Singh. The episode was edited by our resident sound engineer Rajiv Sian. We'll be back next week with a new edition.